Hi, welcome back to Investor Insights. This time around, I want to talk about investing and the finer points of investing. I think one of the biggest mistakes that people make is they don't really understand the meaning of investing. Very often, they confuse investing with trading. Two very different things, two different mentalities, two different strategies. Investing is when you put your hard-earned money into an entity or several entities in hope that it gives you a return that is greater than inflation. Very simple. But as simple as it sounds, it's a very difficult game. There's several aspects to investing that a lot of people don't think about. Most people out there are what I call lemmings. They just follow what everybody else does. And that's the biggest mistake. Just because everybody does the same thing does not mean that they're right or that it's the correct decision to make. The most important thing to think about is why you're doing it, how you're doing it, and when to do it. So the most important things to consider when investing is, number one, your mindset. How risk averse are you? Now, if you're 25, you've got an investment time frame of 30, 40 years. Volatility should not be a problem for you. You should sleep pretty sound at night, despite all the ups and downs. And if you have a weak heart or you just really don't have the stomach for it at a young age, then you know what? Let other people do it for you. Now, if you're middle-aged, you'd be somewhat less risk averse, but if you're 40 or 45, you still got 20 years until retirement. That's still a long time. So you should be able to take on some risk and you should sleep pretty well at night despite taking on that risk. Now, if you're near retirement, you're 60 or 55, somewhere along there. Actually, 55 is not really retirement age, so I like to take that one back. But as you near retirement, you have to be risk averse because at that age, preservation of capital is the key. So be aware of what mindset that you have, and you just have to be in the right frame of mind before you even invest. The second point I like to raise is you have to be committed. If you're not committed, if you're not going to go out there and understand the process of investing and doing the research and reading up and following articles and talking to people, getting educated, then you know what? Leave it with other people, because you don't want to invest like a lemming. You're going to lose a lot of money, especially in today's market. If you follow everybody else, you're going to get sunk. Be aware of that. You have to be committed. Number three, and this is a very, very important point. This is something that a lot of people who are lemmings, they bypass this step and they get killed. Education. You have to educate yourself so that you know what you're doing. You have to know, for instance, what you're investing in, what the investment environment is like. You have to see what trading conditions are out there. You have to see how the economy is doing. And probably most important of all, what is it that you're really getting into? A lot of people don't think about it. They get a tip from their butcher, buy this and, oh yes, it sounds good. They go home, press a button and they do it, and that's just throwing darts at a board. I mean, it's hit or miss. A butcher's job is to cut meat, not give stock tips. That's a tip for you, by the way. So you gotta educate yourself. That's very important. The fourth point I'd like to raise is somewhat, it's important, but a lot of people just, if they're lemmings, they just forego this step again. Is you have to know what the investment environment is like. Now, today, for example, the American stock market is near an all-time high. You've got gold down, you've got a lot of currencies down against the US dollar. A lot of economic data points are being released day in, day out, and the markets just swing wildly. And how do you know when to get in and how do you know when to get out? But technically, that's more trading, but you still want to have an entry point when you invest in something that's not going to cost you a lot of money as soon as you get in. You want to get in at a point where your downside is limited and your upside is unlimited. Another point I'd like to raise when people invest is how they allocate their monies. People don't think about that. Say you've got 100 grand somewhere and you do a bit of research on a company and you go, you know what, that company is pretty good. All right, I'm going to put 100 grand in it. Well, all your eggs in one basket is a pretty dangerous game. Problem is that if your research is wrong, or if you're just a lemming and you took a tip from the butcher, man, you're gonna get killed. And it's not pleasant, because if all your money's in one basket and it goes against you and you're married to the position, you're just gonna ride it and ride it and ride it and ride it. And it's gonna be a painful experience. Why put yourself through it? Investing has never been an easy game. There's a lot of considerations before you make an investment. And don't forget, although I'm just talking about stocks here, investments aren't just in stocks. You can invest in real estate, currencies, not just local stocks but international stocks. You can invest in bonds, and then you've got different types of investments which, because I'm not familiar with them, I'm not going to go into them, but you've got things like collectibles, like you got art, you got collectible cars, you got stamps, you got coins, you got all sorts of things. And you know what? Just because I don't talk about them doesn't mean they're not good investments. If you happen to be in a field that you know very well, i.e. a stamp collector, and you've got a massive stamp collection worth a fortune, man, don't sell up and buy stocks. If you know what you're doing, stick by it. You have to invest in things that you understand. And that's the main message today. It's not just about taking money and allocating it somewhere. You have to know when to do it, what to invest it in, and understand why you're doing it and how you're doing it. Just a few things that I'd like you to think about before you actually make an investment. Until next time.